Welcome back to this week's edition of the Risk Spotlight Operational Risk News Update. My name is Emily Jones, and today I'll be bringing you essential updates and insights from the world of operational risk, drawn from the past week. All information shared here is sourced from the RiskSpotlight Portal, the premier forward-looking service dedicated to operational risk content. Let's get started. The first update is about new guidelines for fund names using ESG or sustainability-related terms in the European Union. The European Securities and Markets Authority has released official translations of these guidelines, aimed at protecting investors from exaggerated sustainability claims. Asset managers will now have clear criteria to assess whether they can use ESG terms in fund names. The key requirement is that 80% of investments should meet environmental, social characteristics, or sustainable investment objectives to use these terms. These guidelines will kick in on November 21st, 2024, with a 6-month transition period for existing funds, ending on May 21st, 2025. New funds created on or after the application date will need to comply immediately. This move is part of the EU's efforts to ensure transparency and accuracy in sustainable investing, giving investors more confidence in the ESG claims of the funds they're considering. The next update is about changes to EU sanctions best practices. The Council of the European Union has updated its guidance on implementing restrictive measures, clarifying that the ownership threshold for asset freeze restrictions is now 50% or more of an entity's proprietary rights. This aligns with the US approach, but differs from the UK's more than 50% rule. The guidance also expands the control test to include de facto dominant influence and provides red flag indicators for potential control. Importantly, the EU now confirms that aggregated ownership should be considered when assessing sanctions applicability. These updates aim to ensure more uniform interpretation and application of EU sanctions across member states. While non-binding, these recommendations are likely to be influential for national authorities and companies updating their sanctions compliance programs. The next update is about the rise of file-sharing phishing attacks, which have surged by 350% year over year, particularly in the financial sector, where 1 in 10 advanced attacks now involve this method. Cybercriminals impersonate services like Google Drive, Dropbox, or DocuSign, making their malicious attempts look like legitimate communications to steal credentials or spread malware. The financial sector is the main target due to its high usage of file-sharing platforms, quick decision-making, and regulatory pressures, followed by the construction, engineering, and real estate sectors. While security awareness training is helpful, advanced threat detection is essential to identify these increasingly sophisticated attacks. The next update is about the alarming rise in password reset attacks. According to the annual LexisNexis Risk Solutions Cybercrime Report, there's been a significant increase in fraudulent password reset attempts, with 1 in 4 such attempts from desktop browsers being fraudulent. In the UK alone, there are 70,000 password reset attacks every week. These attacks, which aim to take over individuals' online accounts, have seen a 4-fold increase over the last year, with bot-based attacks skyrocketing by 1,680%. The report highlights that detail change attacks, where fraudsters change users' passwords and phone numbers to lock them out of services, rose by 232% in 2023. Desktop users, particularly the elderly or those less comfortable with smartphones, are more vulnerable to these attacks. Media streaming, e-commerce, and mobile services are the most commonly targeted accounts. The surge in these attacks poses risks not only to individuals, but also to enterprises that haven't implemented stronger authentication methods or protected their password reset tools. The next update is about the escalating ransomware crisis, which is seeing a significant rise in both the number of attacks and the emergence of new groups. Recent reports from Corvus Insurance and Searchlight Cyber highlight a 16% increase in ransomware incidents in the second quarter of this year, with a 56% surge in active ransomware gangs in the first half of 2024 compared to 2023. New players like Play, Medusa, and RansomHub have surfaced following the takedown of groups such as Lockbit and Black Cat, with RansomHub quickly becoming the third most active group, targeting critical infrastructure sectors. The average ransomware demand has soared to over $1.5 million, while double extortion schemes involving data theft are now prevalent in 93% of cases. Despite these trends, a decrease in the overall number of listed victims suggests that law enforcement efforts are beginning to have a positive impact. The next update is about cybersecurity budgets facing pressure in 2024. The 2024 Security Budget Benchmark Report reveals that while most security departments are still increasing spending, growth has slowed, with average budgets up by 8% compared to 17% in 2022. Around 25% of CISOs reported flat budgets, and 12% experienced cuts, with hiring also slowing. Organizations are now targeting their spending more carefully, focusing on defending against sophisticated threats like AI-driven attacks. Asaka's research suggests that modest budget growth, coupled with rising threats and staffing challenges, feels like a cut in real terms for many, influenced by economic uncertainty. The next update is about the growing trend of right-to-disconnect laws worldwide. Australia recently joined over a dozen countries with laws allowing employees to ignore work communications outside of hours, except in emergencies. While the U.S. hasn't adopted this yet, California proposed a bill to establish such a right, though it is currently stalled. Employers should consider revising their policies on after-hours communications to anticipate potential legal changes, taking into account employee status and compensation for non-exempt workers handling work-related matters outside regular hours. The next update is about recent developments in the global Mpox situation. India and Jordan have reported their first Mpox cases last week. A particularly worrying trend is the disproportionate impact on children, with data from the Africa Centers for Disease Control showing that 58% of cases since January have been among those under 15 years old. In response to these findings, the UK has issued new Mpox guidance for schools. The United States has beefed up testing and surveillance for a new strain of Mpox and has ensured that vaccines are readily available at local pharmacies and community health centers. Now let me provide a quick update on key operational risk loss events that were reported in the media last week. The next update is about a significant enforcement action by the U.S. Securities and Exchange Commission, or SEC, which has fined 6 major credit rating organizations a total of $49 million for what it calls significant failures in maintaining electronic communications. Leading the list are Moody's Investor Services and S&P Global Ratings, each facing a $20 million civil penalty. Fitch Ratings will pay $8 million, while AM Best Rating Services faces a $1 million fine. Smaller penalties were imposed on HR Ratings de Mexico at $250,000 and Demotech, which was fined $100,000. The next update is about a significant IT outage that affected multiple major banks in the UK on September 2, 2024. Lloyds Bank, Virgin Money, and Nationwide all experienced issues with their online and mobile banking services, causing widespread disruption for customers. The outage was potentially linked to issues with Microsoft Azure. The next update is on the recent global IT outages caused by faulty CrowdStrike software. CrowdStrike is set to testify before the U.S. House Homeland Security Committee on September 24th. Interestingly, it's not the CEO George Kurtz who will be in the hot seat, but Adam Myers, the Senior VP of Counter-Adversary Operations. This hearing aims to shed light on the patch incident that brought many U.S. companies' operations to a standstill. And there you have it, a whirlwind tour of last week's operational risk landscape. If you want to read more about the topics I have covered and review additional content on emerging operational risk topics, then please log into the RiskSpotlight Portal if you are a subscriber, or go to riskspotlight.com to sign up for a free trial. Thanks for tuning in, and until next time, stay safe and keep those risks in check.